Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. So let's get started. Anyone who has been trading lately has enjoyed a nice little run in the stock market. All of a sudden, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 buying days. Look where we are now again. We're 50% back to the all-time high here. Now, the question sort of that lies is this something that we expect to continue going? Is it going to hit its head here at this one here, this level? Is it going to come back down into this floor here and then bounce up? So we've a couple of sort of questions now to sort of have a look at this and to see what's potentially going to happen. Now I'll actually bring that up a little bit more to about there. So what I'm doing is I'm sort of dividing it up as zones. A couple of bounces there, a bounce there, a bounce there, a bounce there. So we talked about on the webinar the other day, we talked about this here on the daily or on the 4-hour break and then retest, break and retest. We drop down to the 4-hour, we have a look at the trade. We talked about this particular trade here, depending on how risk adverse you are, or this one here was valid as well. So entry above that big red bar, stop loss there. And at the present moment in time, we are right there. So that's 1.7, just under a 2-to-1. So depending on where you are on this particular trade, if you put your entry there, which should have been amended, you are 1%, you're 3.7. So you would have hit it nearly a 4-to-1 at the moment. But let's have a quick look at the daily. Well done, anyone that took that. So it depends on now what we're looking to do. So looking at the likes of this market now at the moment, what do you guys expect to happen? Do you expect to hit its head and come back down? Or do you expect it to break and retest? So which scenario are we expecting to happen? So I'm just going to move this out of the way for a second. Extend that on. So are we going to get this pullback here down to there? Or are we going to continue break and then retest? So which do we think is going to break? Is it going to continue breaking and then retest? Or is it going to hit its head here of this ceiling, come back down and then go again? I expect it to hit the head after 11 days of buying. Okay, so Marcus, why after 11 days of buying? Is there specifics for the 11 days, or is it just all these buying bars here? Yeah, look, it is a lot of buying. It's a huge amount of buying. It's a huge amount of buying. So I need, technically, I would love to see it hit its head here and then come back down to this floor. That would be an absolute ideal scenario, pin perfect point where we're looking for this to break and retest. That would be the ideal scenario. But again, trading is never ideal, is it? So that's where I personally be looking for to hit its head here, come back down to this floor, and then we start buying again. That would be the ideal scenario. Now, if it continued going up and then pulled back to there, it wouldn't be as good a scenario, okay? And it wouldn't be as good a scenario, but it still would be okay. It'd be still decent. But the idea would be is there's the previous high. We're looking for it to come back to support, break and retest at that support, and then take off. Now, if we look at this on, say, the smaller time frame, because there'll be loads of people going, Henry, we could have traded this on the smaller time frame, and absolutely we could. We're looking for a phase 1 and phase 2. So there we have the phase 1, 2, 1, 2. There's one we highlighted already, phase 1, phase 2. And you could have actually jumped in on that as well on the break and retest here. And then if there's another little pullback into this area, again, would we take that? Absolutely, there are trades there. There are trades in a smaller time frame for us to continuously take. It depends on how aggressive you are. But for me, as a trader who's been doing this for a long time, this for me is overextended. This is over, it's a point where I do not want to be in. It's too extended. This is not something that I'm interested in. I need a pullback, and then if we get a pullback, then I'm looking to trade that. Okay, that's the point where I'd be potentially looking then if we get back to that point. S&P will be very similar. We wanted a pullback down to here. It hasn't happened. Now I want that pullback down into that point. We'll look at this horizontal level. Not the greatest horizontal level in the world. Is a bounce there. So it may even, that level may even be put there, but we have it there because there's 1, 2, 3, 4 touches. So again, it's not the strongest level in the world, but again, it's there. Problem is that it's been broken quite regularly as of late. So I need some sort of pullback into this area, comes back to here, then I'm looking for it to take off. And this will be the potential first area. I'm now quite bullish on this market, if that makes sense. This could be the beginning of that next upward move. But again, we don't always get those upward moves smooth. Okay, we don't always get them smooth. Sometimes they trigger some sideways movements. If memory serves me, around 2020, was it? Wasn't 2018 here. Okay, so if we look at this one here, we had this very slow recovery, look. So it comes down, takes off, pulls back, makes a higher high, and then drops the whole way back down to here again. Drops the whole way back down to a double bottom. And then look, the market now starts to trend nice and slowly again. Look, starts to go nice and slowly again. Now, I don't know whether we're going to get that same sort of setup, but at this present moment, we're probably somewhere about there now. Okay, we're 50% up on the drop that's happened. We're in around that. We've had a pretty decent movers to the upside. Are we now going to get that pullback there to a decent area? Or is it going to go the whole way back down here to, say, a double bottom? Okay, so just keep an eye out on the market and to see what we expect to happen. So we're about 50% up to where we are now. I need a little pullback there or there. It needs to come back to one of these areas. And if it comes back to one of these areas, then that could be a potential trade to the upside on a CFD rather than the underlying asset. Now, if you're trading underlying assets, do you think it would be a good point now to be potentially investing in the likes of ETFs? So for anyone who doesn't know what an ETF is an exchange traded fund, which means then the equivalent of it is the NASDAQ is the QQQ, which means then that they theoretically own every stock that's in the NASDAQ, and you're theoretically owning the stock. Okay, now you don't because they have turned into CFDs. But do you think this would be a good time to be potentially jumping into your sort of your what would you call it, your the likes of your funds that we've been looking at, the likes of QQQ, the SPY, or even the CQQ? Absolutely. But okay, so everyone is saying yes, peace talks between Russia and Ukraine look promising, but how long have we been saying that now? We've been saying that for the last 2 or 3 weeks. Yes, expect some bumps from the Fed. Well, I actually disagree. I disagree. I don't expect any bumps from the Fed. I expect the Fed to do exactly what the Fed has done the whole way along. The Fed will continue raising interest rates. I'll just come out, there's nothing promising from peace talks. But again, there's the Fed will continue doing what the Fed have done. So the Fed is probably one of the easiest things to predict in the world. They'll tell you, oh, I think we're going to do this. We're not sure, but I think we're going to go do this. And then, oh, we're not sure, but I think I'm going to do this. And I think I'm going to do it at this particular rate. And then they do exactly what they're expected because they don't want to spook the market. All right. They let the market know things get priced in. So what has been the big change over the last 10 days? How many rate increases are we expecting? Didn't they pencil in 6? If my memory serves me right, they have over the next 6 quarters, as far as I know, they have 6 interest rates at 25 basis points. To layman's terms, is 0.25. If my memory serves me right, because I was watching the statement. But the Fed reacts and make it up. But the same, we're all sort of making up. But the problem is that the Fed will let you know massively in advance. They'll massively let you know in advance what's going on, what they're doing. And that's the only big change that we have had in the last 10 days, is that the Fed interest rate has now happened. That's the only thing that has changed. So the idea is that now it's a very same as Brexit. Very same as Brexit. If we jump over onto, say, the UK 100, we had Brexit. We had 18 months of absolute sidewaysness on the likes of this. We had this big drop, and then it just moved sideways. Now, once we actually got a little bit of certainty, look what happened to the stock market. It actually took off again. So once it comes out, everyone's going, oh, this is going to be crap, this is going to be crap, this is going to be crap. All of a sudden, the market has reacted and dropped and dropped and dropped. And now the market has dropped so much that even though it comes out and it's not great, well, it's actually better than we first anticipated. Why? Because the market has been so scared, everyone is running for the hills. It's just dropped and dropped and dropped. So that's the idea behind it, is that the certainty, once we have certainty, we actually now know what's going on, and the market has reacted, and that's the big change on the likes of the UK or the US stocks over the last 10 days. UK 100, well, we have it here. We'll have a look. So we, again, very similar to the US stocks. We're almost at a record high here. I would expect some sort of rejection. Sorry, we're not almost at a record high. There's the record high. I would expect some sort of rejection at that point. Let me see. I would expect some sort of rejection at that particular point right there. Wanted to do that, I wouldn't be able to do it, but I expect some sort of reaction if it hits there, and I fully expected to hit there. The only difference is will it have a phase 2 before it hits there, or will it hit there and then have a phase 2? Now, I sort of expect it to hit there and then have a phase 2. I don't expect this sort of to come back in between. Now, if I expect this to continue going up, can I trade this on the smaller time frame? And the answer to that is absolutely not. Absolutely not. Now, the problem is that we don't have huge consolidations. We don't have huge cyclicity. We don't have much of that there. So see that there, we have potential double top. If it goes up and then comes back down, there's a potential trade there, but it's not something that I would be interested in. It's not something that would jump out at me that I need to take this, okay? But it could go the whole way up to here on the smaller time frame before we get a proper pullback. And I do expect it to continue before we get a proper pullback. But again, it's due a pullback. Look at the momentum. It's just from here, they've just taken off. It's due a pullback. We're due a little scare in the market. We're due something. We're due a little correction. We're due something, or it won't continue. It won't continue like this. It never does. The German DAX, the German DAX has now come into this area, okay, which will be quite interesting area to sort of look at. We talked about this on a smaller time frame being in this sort of wedge shape pattern, and we talked about it potentially breaking out. Why? Because the news and everything, the sentiment was all bad, but now we can see it's after breaking out to the upside. But what we're also doing is we're back into that area. We're into that area on the daily that we actually took some trades off of long. Okay, so we're back into this area. Now, would we be looking to take a short of this position right here? Would we be looking to short the market at this particular point? So it's hit its head. Are we now looking for the market to drop down? What's the general consensus here? What are we thinking at this particular moment? So most people have said we would expect it to drop down. I actually disagree. I think with the momentum in the market at the minute, I think it'll actually break through there. Now, obviously, this is just my opinion. I actually think it with the momentum, obviously we have to wait for today's bar to finish. And today's bar finishing will give us a huge indication what's expected tomorrow. But I actually think it'll break and then retest. It'll break and retest. If it breaks and retest, that for me is a really good position then to go long. Now again, how much is left in it? I don't know. Again, is it better to jump in the US stocks rather than the likes of this one with what's going on in Europe? Potentially. But the idea is we have to trade. So do I expect it to bounce off this? No. With the price action, with the momentum here, there's a little bit of momentum, and everyone's looking at it hitting here. So I actually think there is going to break and retest here. If it breaks and retest, then that's a really good position. Now, the problem is do we take it as a break and retest on the daily, or do we drop down to the smaller time frame? So if we look at the NASDAQ, we had a break and retest here. Look, bounce, bounce, break and retest. But if we look at it, it's a 1 bar pullback. It's a 1 bar pullback. Look at the one red bar in there. So it's a 1 bar pullback, which means then it didn't give us an actual proper setup on the daily. Now, is the German DAX going to do that? Or is it going to move away and then come back properly? And those are the questions you have to ask yourself before you actually take this trade. If there's a 1 bar pullback sitting on this, is that a good enough trade for you to take? Can you actually see it on the time that it actually sets up? So they're all sort of questions that you sort of need to answer yourself before you place a trade. If it's a 1 bar pullback and it's on the 4 hour, I'm happy to take it. Or I sit and wait for it to come back properly on the daily chart. They're the two scenarios. Now, I talked about this last week, and I said to you guys, if I was in this trade, I would have closed that. I think it was last Wednesday when I was saying it to you guys that I would have closed that trade, or was it 1, 2, 3? Was it Sunday? It was probably actually Sunday when I was saying it to you guys that if this trade, we were here in the market was here, I would have closed that trade. Okay, and look what happened since then. You would have been stopped out, so you would have lost maybe 5 or 6 quid if you had have closed it when I said it. And we just didn't get any momentum to the downside. The US market is going up. The European market had stalled a little bit, but it looks like there was more buyers and sellers in the market. So, as a matter of fact, did anyone take that long? Anyone take that long? I know it's not a great setup here, but did anyone jump down to the smaller time frame and actually take that long? Shane or Tyson, you didn't jump in on the likes of that, no? Is it a decent setup? No. Not on the CACs, no. Okay, cool. Anyone else? So again, the next thing for us to trade on this one is to pull back into some area like this. But again, we wanted to maybe have 1 more buying bar and then slowly come back. We don't want a big, huge selling day. We never want that. We want slow, precise coming back. And the problem is that the market is not giving us slow and precise. It's giving us jumps. It's giving us one way or another. It's telling us that it's taken off. So that's the problem. It's never at the minute. It's not playing ball with us, if that makes sense. China 50. So anyone who took that trade there, short, well done. Trade is what went down as far as a 2 to 1. Do we expect this to continue going down? Now, the China market has done the opposite to the other markets as of late. Okay, so when the other markets are going up, this was dropping. When the other markets are dropping, this was going down. So in that sense, we would expect this to continue going down, but it seems to be sort of a fight going on here. Will it break this low again? Any sort of time will tell. But at the minute, it's still looking bearish. It's not looking as bearish anymore because of Shanghai lockdown. It looks like there's a little bit more bearishness, but again, it looks like there's a potential bit of buyers are jumping in here. It looks potentially that there's a little bit of resistance going on here, but we will see over the next couple of days. So just sort of keep an eye on it. There's a lockdown in Shanghai that could have a huge bearing on the market here, but again, when we were talking about the likes of America and the likes of the UK went into a second and third and fourth and fifth lockdown, things didn't really, the markets didn't react anymore as much. You had specific stocks that reacted, but you didn't have the whole market react as a whole anymore, if that makes sense. People have now got used to it. Okay, so we potentially talked about this as a long, okay, on the smaller time frame. On here, and what happened, it turned out to be sort of a head and shoulders pattern. So there's a left shoulder, there's the head, there's the right shoulder. We talked about this as potential buy, triggered in, then triggered out. And what happens now is that head and shoulders pattern has played out quite nicely. Now, I'm assuming it's to do with the announcements that the US are going to start releasing their reserves of oil. Saudi is going to ramp up some of its production as well. And then also what we have, so there's the neckline. So there's this trend line here is a neckline. Okay, so there's the inside shoulder, the right shoulder, and then there's the break of that neckline. Okay. Also, we have a technical break and retest here. So we can see the break and then retest. That is probably one of the easiest and simplest ways of trading that you will ever see, a break and then retest. You cannot underestimate how powerful they are and how often they happen. What happens is it changes direction, comes back, hits it, and then goes again. All right, so the break and retest. Looks like there's a few more sellers in the market at the moment. So anyone who took the short, well done. I know in the Discord chat, Tyson put that short trade up there. So anyone who jumped in with him, well done. Good trade. Natural gas. So natural gas has had a really good week, except well, last week was a really good week. It sort of took off. We talked about this entry and then it went up and it easily would have hit a 3-to-1. I know we talked about having our take profit there, but what happened then is it completely smashed through that. Okay, so completely smashed through that there. So all of a sudden then the market has just continued to go. Now, there's not massive amounts of levels there, but we did have that as a double top there. We got a horizontal line. We have that there. Bounce, then rejection. Did anyone take it short off that level there? I'm assuming not many people did. Dropped down to the 4-hour, probably had a nice price action bar, but we didn't. We had an inside bar, so didn't give us a good indication. So price action wasn't great there on the 4-hour. But the question is where do we expect this to go? Now, if we have oil dropping, do we then expect natural gas to drop? If we look at the lows here, the lows are the pullbacks are pretty deep, aren't they? This one came back to about 40%. This one came back to about 75%. So this one came back about 75. This one about 75. This one only about 50. This one about 75. So over the last 1, 2, 3, 4 cycles, on average, has come back about 60 to 70%. So then do we expect this to pull back to about there? Because that's where by looking at these last few cycles, where would expect it to pull back to? If we're using support and resistance, you'd expect it to pull back to there. So these are all things to be aware of if you're taking this trade. Okay, are we expecting to come back to the trend line? Are we looking at this horizontal line that is going to bounce off? Are we expected to come the whole way down to there? They're all questions if we're looking to short this. If we're looking to long this, we ask all those questions. But we ask those questions once we have the price action bar that's interacting with these levels. They're the questions we should ask when we have a price action bar that's interacting with those levels. And then if it's interacting, then we can ask those questions. Okay, cool. Before I go on to anything else, I wanted to have a look at some other stocks. Okay, some of you will have seen it in the group. Some of you will not if you're not in the group. CGC, so the Canopy group. Now, we have talked about this sort of on numerous occasions. We've talked about this on numerous occasions. We've talked about it when people were looking to trade it back a couple of years ago. We've talked about it, so on and so forth. This time last year, we talked about it as well. And we're back talking about it again. If we look at the pre-market, we're slightly up again on the pre-market. Okay, so does anyone know why I'm bringing sort of this topic up? Cannabis. Can anyone hazard a guess? Peter said there's a vote. Okay, come on, be a little more specific. Okay, so there's a cannabis legal vote in the likes of the US, which is coming up very shortly. And what happens is, because the likes of this stock is really, really cheap, if this goes pretty well, yes, in the US, yeah. So if this goes pretty well, we could have a jump of 100, maybe 200% on this very, very quickly. If this goes wrong, you'll probably see it dropping back to the $6.37 or the $5 where it was previously that low. Okay. Now, is this sort of stock a little bit undervalued or a little bit overvalued? You could argue both of them. You could argue both of them. You could, if you look at the likes of this and say, is the likes of cannabis going to eventually become fully legalized? And if you think it is, this could be a decent little play. But again, this is not a play that we're looking at that's going to make you money tomorrow. This is sort of a play that could make you an awful lot of money over the next 5 to 6 to 7 years. Okay. Now, depending if this company is still there, if it's still doing what it should be doing. Okay. So this is one of them. Okay. So this is one of the bigger ones. We also have Hexo. Again, we're sort of back down into that floor. Psychedelics are a way forward for mental health, so I would expect growth in the long term. But I'm just going on the actual drug use rather than the actual medicals of it, because people love getting high. It's the youth of today absolutely love it. So these are, I'm going to look at that one now in a second. But are we at a point where we think that this now has potential upside? Are we hitting the floor here? Do we think this is a potential game changer for this industry. Because if we look at it, there's huge room for growth, isn't there? Once people jumped on board, this went up to $11. Now, I understand that we can't really be doing this estimate. That's 1,400% return if it gets back to that high. So it said, someone said trade, yes, we could, but trade with a stop loss. I actually disagree with you. Absolutely disagree with you. You do not trade with a stop loss. When you're trading stocks, you do not trade with a stop loss. You risk manage and only use 1% of your capital. So that means if this stock drops 50%, you're still only risking 1% of your account. So I'm not talking about trading CFDs here. I'm talking about trading underlying stocks. These are all underlying stocks. They're not CFDs. So if you have 10 grand in your trading accounts and you're risking 1%, you're risking 100 quid on this trade. So even if this drops from here down to this level here, so it goes from there down to here, it means you've dropped 33%. Okay, so which means then that your 100 quid has now gone down to $66 or 66 quid. If it goes down to here, that's 50% of your 100 quid. But remember, a stock cannot go below zero. So that's as far as a stock can go. So the worst case you can lose is 100 quid. So there's no need to trade with leverage with the likes of these, because if the upside runs, there is huge upside on it. The downside is limited. The only downside we have on this is our 100 quid that we're losing 1% of our account. So when you're buying underlying assets, there's no need to put a stop loss on it. If you put a stop loss on it, you end up getting triggered out of trades too early. And the likes of this is, people always ask me about small cap stocks. This would theoretically be the equivalent of our penny stocks. This would be the equivalent of buying a penny stock. Because if it gets back to the previous high, there's 1,400% return. And if it gets to there, where does it stop then? It continues going. So the idea is that we risk manage 1%. There's no need to put a stop loss on an underlying asset. It's sort of counterproductive. But if you're risking 10, 20% in this trade, then yes, you put a stop loss at 1%. So Sadnam, you shouldn't be putting a stop loss. It's you risking 1%. So they're completely different things. If you're putting a stop loss, you are potentially trading a CFD. Risking 1% is that you're only ever risking 1% of your accounts, okay, per trade. All right, so good. We're actually on the same wavelength. You've just called it the wrong name. All right, good. Okay. And then the other one wanted to have a quick look at is so this one has had a bigger bounce than the other ones. Okay, it has a little more of a floor. And if we look at it here, up to the previous high, look, it's not worth even trading. It's only 713% return on this one. Do you give any credence to the trading view analysis in the bottom right-hand corner? No, very, very little. Okay, my thing is looking at supply and demand, looking at trend, looking at stuff that I think will grow, stuff that I'm happy to hold on to for 5 or 6 years. Okay, so what you're referring to is down here. Now, there is some decent analysis in here. Now, the things that is decent and that I use is the likes of this. We look at earnings. You can look at how earnings have gone over the last 1, 2, 3, 4 earnings. 3 out of 4 earnings were profitable. We're expecting this one to have the sort of the same earnings, but will it be higher or lower than it was last quarter? The next one then is coming out here is the 12th of April. Now, if we get good, if the sentiment is good coming out of the vote, and then we have a good quarter here, where's this stock now going to end up? Is it going to be up here? What happens if the vote is good and then we have negative earnings? Does that mean the stock is still going to end up here, or whether it's going to drop down? Or, play devil's advocate, what happens if the vote is not good? Will it drop down? And then the earnings are not good. So the idea is you have to sort of work out, are you happy to jump in on the likes of these with a 1% of your capital? And if you do jump in with 1%, where do you expect this to go? Is this long term? Is it short term? Technicals, strong buy. Analysis rating, neutral. Again, who's rating this? Who done the technicals for us? Who did that for you? You want to look into how good they are. Do they have the same reading of the chart as you have? For analysts who have done that, how many analysts actually did it? Where is it coming from? Okay, so make sure you're doing all those. But I never let any of this stuff sway me into any sort of particular trade or anything like that. But at the present moment, there is a potential legislation change. There is a vote going on. But the idea is that we buy on rumor and we sell on the news. Okay, so at the minute, there's potential rumor mill going on at the minute that this could be quite good. And we can see already over the last 2 days, there's been a spike. Now, do you put 100 quid in and let it run, or 50 quid or 10 quid, whatever it is? Stuart, I have no idea of that question. If you WhatsApp me a little voice note, I'll have a chat to you about it. Okay. So what we're doing is we have the likes of this. Okay. Now we have that floor, we have all that sort of stuff, and then if you think this has legs, then you go. If you don't think it has legs, then you don't. All right. So it's something that I wanted to bring sort of to your attention, that this is something that's potentially taking off. There's potential legislation change, and there is potential investment opportunity if you're bullish on this. If you know nothing of the market and you don't want to do anything with it, then you stay away from it. Okay, just make sure you understand your market. Okay, so just make sure you understand your market, you understand what's going on, and you're looking at it. Now, a trade we placed, I just wanted to have a quick look at. What was Aussie CAD, was it? So we talked about this divergence. So in the chat group here, we talked about this. We talked about this here. That was in the FX. Was in the FX chat. I'll go up here. Okay, so we talked about this trade here. It had a double top, horizontal level, price action bar. We're looking for a one-to-one on this, and we had divergence. So we had divergence here. So that's clear divergence going on there. So the idea then is, I popped it up here. Do we think this is a good trade? Yes or no? And the general consensus on that was no, it's not a good trade. Now, again, I have no idea whether it's a good trade or not, but at the present moment in time, the trade is going in our direction. Now, as we can see, yesterday it was going in our direction, then it popped up and then finished a high test bar. Today, again, it went up negative, and now it's come back down a little bit. So it's slowly heading in our direction. Now, is it the best trade in the world? No, because we are trading strengths, which is Aussie, versus strength, which is CAD. Okay, so we're trading two strong currencies. So is it the best trade in the world? No, it's also reversal. And again, with reversal, I'm only looking for a one-to-one. But it was something that I wanted to highlight to you guys and actually show you the difference between trading with trend versus trading reversals, what you have to do when you're trading sort of reversals. Let's have a look over here at the cryptocurrencies. We've had a little bit of good news over the last sort of week to 10 days on this, which is quite promising. And I'm assuming we have a lot of happy bunnies at the minute. Slowly but surely, the market is starting to turn, which is good news for everyone. Now, the question is that how much upside this has. So it's depends on what sort of momentum we have here. Will it hit this level here, which is the 52K? Will it hit the 50 grand mark and then come back down? Will it now drop down through these? Now the problem is that this level is, yes, it's recent, but is it being respected? Not massively. Not massively. It seems to be this area here between 35 and say 40, 43K. That's where it seems to be an area that it's pivoting. Okay. Tyson has said ape is now a meme coin. Well, look, it sounds like a meme coin to me. So the idea here is we have a little bit of bullish momentum. So we now want it to continue up and then pull back into this level, and we get it goes up a little bit higher and then pulls back. That could be another area to invest again, and we actually jump in on the beginning of this potential upward momentum. If we look at ADA, we've now jumped above this sort of level here. We're now back in. Did anyone buy it when it was below this sort of level or anywhere close to this level? At the minute, down about 24. So bought a little bit down here again, which was quite nice. Again, we're slowly starting to turn on this Matic, but again, it depends on whether this market is now going to continue going or not. Matic, we're about break even. We had this sort of floor here, and it's now sort of popped back up again, popped its head above that sort of level again. So it's nice to see the first sort of shoots of returns. Solana, are people now going to jump back in on this, or is this going to be one of those flash in the pans? Luna. Which one is it? I'm assuming it's that one, is it? Or is it So this one. Yeah, again, it's after bouncing off that double bottom. But again, everything follows Bitcoin. If Bitcoin takes off, these all take off. They all take off. Does have eToro have Ape? Ape coin? It just annoys me when I'm looking at crap like this. Ape coin. As a potential investment, yeah. Look. Oh, guys, on that note, we're going to finish on that bombshell. Okay, everyone, look, it's been an absolute pleasure. I hope that helped. I hope giving you some insight there into potential investment opportunity and how to actually trade the likes of the NASDAQ, S&P, and the Dow if it pulls back. Look, it's been an absolute pleasure. Thank you very much. Anyone who's interested in jumping in on the groups, let me know. And everything will also be up on YouTube and recorded if you want to watch it back. Thanks very much, everyone. Hope you have a lovely evening. Bye-bye.